It is better to file now and pay the penalties and interest than to wait and risk losing your assets to the tax authorities. Loss of refund. If you have overpaid taxes, you may be eligible for a refund. However, if you don't file your return, you'll miss out on this refund. Penalties and interest. The IRS will charge you penalties and interest on the amount you owe, which can add up quickly. Wage garnishment. The IRS can garnish your wages to collect the debt. Loss of assets. In extreme cases, the IRS can seize your assets, such as your home or car, to satisfy the debt. The importance of filing past due returns. Filing past due returns is crucial to avoid these consequences. It's essential to file your returns as soon as possible to avoid penalties and interest. By filing your returns, you can avoid the penalties and interest that will be charged on the amount you owe. Get your refund. If you're eligible for a refund, filing your returns will ensure you receive it. Protect your assets. Filing your returns will help protect your assets from being seized by the IRS. How to file past due returns. Filing past due returns is a relatively straightforward process. This is a common misconception that the IRS will automatically refund the overpayment if the taxpayer fails to file a return. If the taxpayer fails to respond or file their tax return, the IRS will assess penalties and interest on the unpaid tax amount. Understanding the consequences of missing the tax extension deadline. Missing the tax extension deadline can have severe consequences for self-employed individuals. The IRS will not tolerate non-compliance and will take swift action against those who fail to submit their tax return by the deadline. Understanding the risks of IRS-prepared substitutes. When the IRS prepares a substitute return, it is not necessarily in the best interest of the taxpayer. The substitute return may not accurately reflect the taxpayer's income, deductions, or credits, which can lead to incorrect tax liability or even penalties. The substitute return may not account for all sources of income, such as self-employment income or investments. It may not accurately report all deductions and credits, such as charitable donations or education expenses. Further details on this topic will be provided shortly.